Hi there, you're watching Commodities Corner. Today I'm joined by Nick Kelsey from the Gold and Silver Club in London. Nick, do you think gold will continue to benefit from Greek uncertainty at the expense of equities?
Right now, the uncertainty surrounding Greece is definitely having a very positive impact on gold. Just going back to January, during the build-up towards the Greek elections, we saw gold prices move from a low of 1167 to hit a monthly high of 1307, and that was a 12% gain, and also gold's best month in 3 years. So since then, gold prices have slipped slightly. However, they are still trading above the 200-day moving average, which is viewed as bullish for prices. Just looking to news that came out earlier today, the ECB has announced that it will no longer accept Greek bonds as collateral at a time when Greece is seeking debt relief from the Eurozone leaders. So this is likely to create further volatility in the market, including currencies and also equities, driving capital into gold as a safe haven in the near term.
And Nick, moving over to China, recently the Central Bank of China cut rates. Now, how does this impact gold prices, and what is demand from Asia like right now?
China's move on Wednesday to cut rates was in an effort to add more liquidity to fight off an economic slowdown and also looming deflation in the markets. This has definitely also benefited gold and continues to support prices in the near term. Alongside that, there's also demand from China at the moment due to the Chinese New Year. So we normally see a lot of buying activity during this time of year before that holiday. But just outside of those fundamentals, India has actually overtaken China as the world's biggest gold consumer in 2014. So I think it'll be very interesting to really see if that trend continues in 2015.
And Nick, finally, how do you see gold performing by the end of this year, and what will be the main driving factors?
Gold has made a very promising start to 2015, and it's really benefits from a range of factors, including uncertainties in Europe, the ECB announcing quantitative easing, and also the global currency crisis, which has fueled a number of central banks to ease monetary policies and also cut rates. So based on those uncertainties, if they continue to persist, and gold can continue to hold above the 200-day moving average, and I think we could see prices close above $12.50 an ounce by the end of the year. Now, on the flip side, there's a lot of speculation around the Fed and whether they're going to push up rates this year. So if the Fed does announce a rate hike this year, or even global uncertainty start to fade and gold falls below the 200-day moving average, prices could close the year below $1,200 an ounce.
Nick, a pleasure having you on the show. Thank you very much. Well, viewers, do not go anywhere as we have plenty more heading your way. Bye for now.